Technology Tuesdays. Hello and welcome to the Froggy Five. I'm your host, Jim Freilich, founder and managing partner of Froggy Companies. And today we have a special treat for you here. I've got Jerry Chu on the line, who is CEO and founder of Lofty AI.
We're pretty unique in terms of how our platform works relative to other fractional real estate platforms out there. First is that we are a pure marketplace, meaning that unlike some of our peers, we don't own any of the assets. We don't invest alongside our users. All those properties, they're owned by independent owners who just come to our platform to list it for sale. In fact, any of you listening could do the same. You could list your house for sale on Lofty, right? And we don't even manage the properties for you. So the way it works is, legally speaking, every property's deed is owned by a holding company. In this case, it's a DAO LLC. So this is pretty much identical to a traditional member-managed LLC, with one exception where it kind of marries some blockchain concepts to it. And this is perfectly legal. It's a new type of entity that you can form currently in 3 states: Wyoming, Delaware, and Florida. And I suspect in the future, you'll be able to do this in all states. But essentially, the difference here is the LLC doesn't have a manager on paper. That's it. It's managed by a smart contract on the blockchain. So that's the only difference between a DAO LLC versus a traditional one. Because of that, we, the deed is held by this holding entity, at which point the tokens represent the ownership in this holding entity. So you become a member of this DAO LLC. And so by default, if you own 10% of the holding company of this DAO, you would then own 10% of all of its assets, in this case, the deed to the property. And these holding companies don't do anything else. They don't engage in any other type of businesses. So all they do is own and manage this one asset. And so with these tokens, you're the legal owners of these properties. And again, we as a company don't own any of these tokens alongside our users. So we have no say, and therefore we can't manage the properties. And you don't pay us any management fees either. Instead, collectively as a group of owners, you would actually vote through a governance program that we've created, where typically 1 token equals 1 vote. You guys actually collectively decide what to do with the property, how to manage it. So you can hire third-party property managers. You can elect one of your members to be the property manager if you believe that they have the expertise necessary. You can vote anytime to sell a property, and you choose what price to list it at. You can choose which agents to use. You choose how you want to do rehab and repairs and value add to the property. Essentially anything that you can legally do as a faux owner, if you were to just go out and buy your own property, you can do through this governance program as a group. The only difference is you obviously have to convince other people to vote alongside you. So, if you have some idea or some action you want to take, it requires a 60% supermajority for the vote to pass. But as long as other people agree with you, you can basically propose anything that is legal that can be done traditionally. So that's how the platform works in general. Right. And what we've essentially done is made it so that these properties trade perpetually. It's almost like a real estate exchange, similar to how you can go on the stock market and buy stocks of Apple, and you can do that any day you want. Every day you can sell it today and then change your mind and buy it back tomorrow, right? That type of flexibility and speed of execution and trading efficiency doesn't exist in real estate and has never existed before. And so what we've done with our platform is provide the opportunity for people to basically trade equity in real estate extremely efficiently. And now you can basically buy into the equity of any these individual single family rentals. Some are Airbnb short-term rentals, some are long-term rentals, some are HELOCs from the actual homeowners. So a wide variety of assets, but you can essentially buy into and sell out of a specific property with the same speed and ease of use as buying a share of Apple on your stock brokerage account. And so essentially we've completely made real estate a wholly liquid asset, and we're really proud of that.
Which is amazing, and so is why you're here today for this interview. And so, thanks for giving that background, because a lot of amazing point. I think I started adding up the reason why this is going to be different than some of my other interviews is because I want to drill down on some of these areas.
Sure.
Selfishly, but also for the people, my growing small listenership and people that I interact with a lot on tokenization, right? Because I also, our Froggy X Factor, we consult with multiple companies that do either white label tokenization or, this whole space that you guys are way ahead of so many people in this area. So a couple of things I want to unpack. So I give that as a premise to a couple of things I want to unpack here and try to better understand. So first, on the technology side, the tool that you guys already had that I used in, I want to say 2019, I was part of that churn, by the way, I apologize, but I was with a company, but we were focused on assessing a number of incoming potential deals where ground up multifamily is happening. What I wanted to ask you is that technology, that portion of the technology, does it inform decisions today on how properties are selected to come in, or does it not? And if so, does it?
Not really at all. Honestly,
Okay.
it's a very open marketplace. We only select on quality of sellers and also just quality of properties. And so
Okay.
in theory, anyone can list, and we're not really choosing, like, we're not investment advisors. We're not a managed fund. So we're not deciding, hey, is this a good investment or not? We're more selecting of, hey, does this person are they going to scam users?
Sure.
Right.
Sure.
Like that's actually what we're like filtering for.
That's most important.
And the idea is long term, like pretty much our hope is that the majority of real estate is transacted in this manner in the future, and ideally through our rails and through our platform that we build. And so one of the pitch we always give VCs and people who invest in Lofty, the company, is we're building the NASDAQ for real estate. So that's really sort of the grand vision here.
Okay.
And if you want to achieve that, you actually can't be completely selective, like, oh, these are the best properties in the world, because then your market would just be too small, right? So it's really kind of like, hey, in the future, we want all real estate traded this way. We don't actually even use AI anymore internally.
Okay.
I know it can be a little misleading because it's still legally a part of our company's name, and our domain ends in .ai. But the reason for that was just because we couldn't acquire it initially, and we didn't really look too much into it, the .com domain. And we already built sort of this brand and reputation with a lot of users. And so we just didn't think it was worth it to completely rebrand and shift to something else. But that was the same realization where initially, I would say like the first 10 properties listed on the platform in summer of 2021, those were actually vetted and discovered by the AI algorithm. But what we quickly noticed was the restriction in volume. It was like, okay, well, if this had to fill the AI's criteria, there's only like so many properties you can list at any given point in time. So you just can't really grow in the way that a venture funded company can. And so we made the decision to sunset that part of the business completely.
Okay,
internally we still own the IP and have the model. We can sort of spin it up anytime we want if we want to. But as of today, it's a pure marketplace. Anyone can list properties for sale. There is no AI criteria you have to satisfy.
Okay, great. Well, thanks for clarifying that. I didn't even realize that. Hey, thanks for having me on. If anybody else wants to find out more about what we're doing, please come to froggycompanies.com. Check out our 3 different business areas. We also have the Froggy Fund 1 that's now open for up to $18 million. We're going to be investing that $18 million across a diverse number of assets, cash flowing and ground up. And I'm really excited about this fund and really confident that we can outperform most of the other people out there in terms of what we invest in and how we do our due diligence and the type of partners we put together. So it's great talking to you, and see you next time.